What's happening right now has never been seen in the history of the crypto market. We just witnessed a January that traditionally stays green turn into a total bloodbath that rolled over into a really weak February as we kick off March. Either way, the 4-year cycle rules are being systemically dismantled, and we are in a new era of crypto that will present new and unique opportunities if you're prepared for it. And I'll show you exactly how to prepare in this video because I've uncovered a banker's play hidden in the charts, confirmed by volume, that reveals exactly how retail bulls consistently get trapped and wrecked. So while the masses are buying breakouts, the largest institutional participants are actually dumping their bags, creating a false breakout that's ready to cave. We are going to look at this and a summer lull and why the next 3 months could either be a boring sideways grind or provide the right environment for the ultimate capitulation event before our major crypto market bottom occurs, probably sometime at midsummer into October. So stick around until the end because I'm going to show you the specific weekly candle structure that signals a true trend reversal versus a fake out. And if you can identify this one signal on the charts, then you'll not only protect your portfolio but stand to profit tremendously. You'll know exactly when the pulse of the market has shifted, allowing you to front run the next major move with absolute confidence. So this is a highly valuable and private call that I hosted for our community at Altcoin Pro. And when you join, not only do you get access to courses and classes and a bunch of live calls with pros and experts, but you can even join me live on our Technical Analysis Tuesday calls, where you can take advantage of these plays when they occur and join one of our many successful students who make money even in bear markets. For example, when you type in Altcoin Pro directly on Google, one of the very first review sites that pops up is Trustpilot. And what's beautiful about this site is that you can see that these reviews are unprompted. So it's not like we sent them a link and asked them to review us directly. They went themselves to Trustpilot to leave a review. And in the case of one of our clients, Mike, he stated that he joined Altcoin Pro 6 months ago as a complete beginner. And since joining, his experience has not only been positive, but he's been able to generate profits during a bear market. Instead of guessing or chasing hype, he feels like he's following a structured plan with thoughtful analysis behind it. We truly do have an A-list team of players over at Altcoin Pro. We've been doing this for more than a year and consistently have retained a majority of our clients, even in a bearish market environment, because the stuff we teach truly does work. So go ahead and check out Altcoin Pro to get access to our community, our altcoin picks, our DeFi yield quick wins, our courses, classes, our experts, and more. And as always, my friend, if you're feeling blessed and bullish, comment 777. And if you're going to be the wealthiest person in your family tree, smash the subscribe button. It's been an interesting start to the year, and I feel like it's pretty obvious that we've deviated away from what's typical in this time of the year. Even after we've seen the top in a traditional 4-year cycle. More often than not, January doesn't look like a really bad month, but for us, obviously, it was. And I kind of want to share something with you guys that I recently discovered probably a couple months ago. Whenever they launched it, or at least maybe whenever I noticed it, it's kind of cool. One thing that's kind of annoying about using tools online, especially charting tools, is that it's very difficult to track seasonal charts, right? So like you can see charts where it'll show percentages of how things have performed in the past versus present. You've probably seen on Twitter or X overlay charts like past bull market cycles, right? At this time of the year, we were really rallying. Then, this year, 4 years later, we're not as much. And it's hard to do that without having your own team, or using a specific software, which I've struggled to even find in the past. And then TradingView launched it not long ago, which is really nice. So I don't know if it's available for people who have free accounts, but if you're on these calls, again, I always recommend. There's all sorts of different sales throughout the year, where you can pay a lot less on your monthly or yearly membership for TradingView. Highly, highly recommend. So that said, you can actually just hover over any pair, for example, like this Bitcoin pair, and I want to make sure this is Kraken. I'm not sure if they actually make it different for every single pair or if they use just Bitcoin as a whole, an aggregate. But if I go to, let's say, the index here, you can see that this is one of the oldest charts available. And so I'd have to verify and track that. But you can see that really in the past, right? If we're looking at a log scale, because if you're off a log scale, this is what your chart's actually going to look like. And it's very difficult to know what's real or to have a perspective. This dump looks really nasty relative to the dumps that happened over here. But the dumps that happened over here were far greater in terms of percentages. And I wouldn't say far, far greater. Bitcoin's always held its own relative to the majority of the market. Um, when you look at XRP and its past, all-time high cycles in the, 2013 and in 2017 to where it dumped in a bear market, we're talking 90 to 95% down. Whereas Bitcoin would do about 85, I think 90 in the earliest days, we could look at it. And then it started looking more like 70 to 80%. So my assumption is because we've rallied way less violently to the upside of this cycle, that even though we're dumping really hard right now, it's possible we're not going to dump more than 80% this bear market. Already we've seen so much weakness into the start of the year, and just months and months of, red bars, if you will, that my personal theory, if the stock market somehow remains really resilient and strong, it starts trending back to its prior all-time high, then it's likely we actually start to see a bit of a retrace in the crypto market as well, and we've potentially bottomed out at least for the short term, maybe into May, and we start to deviate away from that sell in May, look away type of a market structure. It's also important to note, and this is something that I've been thinking about, that in past months, or better yet, bull market cycles, the summer months were really weak, right? This is kind of what I like to call your summer lull. And we know this to be true in the stock market as much as it is in the crypto markets. Just your major fund managers and institutional players, they like to take summer break. They all kind of adopt this ideology and this practice that when, from their experience, they've seen everyone else kind of steps away from the market. So the market's not as exciting. So they step away from the market and they just kind of do whatever they want to do with their lives, which means there's less flows in the market, less liquidity. Which is what causes summer months to be pretty boring, usually into the month of October, November is where things start to get really exciting. September, you start to see, the market pick up a little bit more. But by October, more often than not, crypto was looking pretty good. Well, in this situation, right, all we saw was, okay, May didn't look too great in 2025 all the way into June. But then we had something interesting occur, right? By June 23rd, we saw a major rally in a breakout in a bullish engulfing candle on a weekly time frame on Bitcoin. Right here, do you see it? Right? What's so beautiful about a candle like this is not only, and so this is why it's so important to look at price action. Like if you don't look at price action just straight up, and you don't get a perspective looking at this first and foremost, and again, what I always say, a philosophy of mine is when in doubt, zoom out. And so I usually like to start from the top down. I like to look at it. If you're like, imagine you don't even know what a market looks like. You've not, you maybe have the fundamentals down, your basics down. You've watched the four horsemen of technical analysis. Maybe you've looked at a chart a time or two, and you're looking at a completely new asset. You don't know what it's traded like at all, right? I don't start looking at the minuscule, I don't look at a 15-minute time frame. I don't look at an hourly time frame. I don't even look at a daily time frame. I start from the week to the monthly out. Right. And so then you get a good perspective. If it's a stock, when was this thing listed on the NYSE or the NASDAQ? Okay. Or some smaller exchange or index. How long has it been trading above this range, below this range, right? When did we see a major breakout? And so, as you can see here, this candle is really beautiful from a weekly perspective and is a true indication of strength because not only did we fail to break below what seemed to be a pretty strong support right here. You can see that multiple times, right? In May, we broke down here at one point in time. This was a red candle, and then immediately closed higher up into this range on the weekly. Then yet again in June, once and twice and three times, through the month of June, we were retesting the range of 101K without actually breaking below the range on a weekly time frame. So each of these wicks, although this might have looked pretty scary, right? The market to dip and dump right back down to 98, when we were supported here, that was a good signal. Where you had a really bullish environment and a signal was the next weekly close. Okay, and so let's put it this way. It's hard to know during the week unless you're probably looking at the daily or whatever. But let's say you didn't know and you didn't enter up until this point right here. Let's say the market's somewhere over here or even here. It's nice to know that 101K is a pretty strong support. Okay, going all the way back to, May. So that said, do we see anything as, and by the way, I gotta mute some folks. If you're not muted, can you please mute yourself? Because I get some feedback here, just so it doesn't interrupt the training. I'm gonna mute that person. Um, you can see that not only did we not break below the prior range low, right? But we closed we didn't get some huge wick either, right? Notice how this wick does not come above this wick. But here's what I do notice about this candle. Not only is it a very bullish engulfing candle, but our close was extremely close to the wick. This would be a far weaker candle, although it's still potentially bullish. If you see, any follow through, maybe on a daily time frame, you'd have to look at it. What's really bullish about this candle is that the majority of the gains that were made in this week, remained in the range of 108 and did not sell back off. We didn't get any bears stepping in and selling the price back down to 106 for a huge wick or 104 for an even bigger wick, right? And this is still a green candle, but you'll notice that there's a major difference in the amount of selling that's occurring. Virtually no selling happened on this candle, which caused it to close really strong and to engulf the prior candle. Okay, which then created for an environment where there was follow through. Next week, do you see the follow through? Okay, a little bit of indecision up into what? A range resistance. Do you see that? Lots of wicks in this range here, right? A little bit of resistance up there to 110, but what do we see? No wick further down, no red candle, retesting 101. Then you have to worry about, is this thing looking weaker? Is it going to break down? We see a little bit of selling through the week, but immediately bought right back up and closed back into a range resistance. So if you didn't enter this week, this is probably a pretty good week to enter considering we also put in a new multi-week high and we're retesting a resistance. If you look at it on a daily perspective, well, actually, let's go back to the weekly and mark that. And this is just a good practice because if you're ever zooming into the hourly, the 4 hour, which is why I always teach you guys to favorite some of these drawing tools. It's a heck of a lot easier to just click on it and do something like that than it is to always have to scroll through all the tools over here. I had to teach, some people on our team in the past, like they were always searching a crypto here when they wanted to look something up. I'm like, why the hell are you not using a watch list where you can just click through and have the best chart available at all times? Right. So these are things that really simplify your life when you're looking at these charts, which not only makes you more efficient and save you time, but arguably just make it more fun. Right. So like I don't even have to think about like the stress of looking at a chart. It's almost second nature now. I know where to grab the vertical line. I know where to place it. Now, when I zoom into the hourly, guess what I'm doing? Look at nothing's here, right? We'll just click auto. Okay. And I can just zoom all the way back in over there. Okay, wherever the heck it is. Oops, I think I just grabbed that. And you'll notice, look at this was right here, the week that we actually broke out. Or better yet, that was the start of the week where we kept playing with the 109K range before the breakout. And this is that next week where we had that rally, that one candle. I wouldn't have known where to zoom into, or I would have had to remember the day. It's just a lot more annoying than clicking on a line and placing it right there. So these are like little things that will save you time that allow for you to get a better insight into what occurred there. So now in this case, what I'm going to do, okay, look at that. Go to the daily and see what occurred here. You'll notice that we had, this like flag here, this bull flag, if you will. Okay, we had a lot of descending price action. Let me go ahead and grab another line right here. Okay, and it doesn't need to be perfect. I'm just trying to draw it for you really quickly so you guys can see it. It doesn't ever actually need to be fully perfect, by the way. I think a lot of people, there are those analysts that have to have everything 100% by the books. Oh, that's not a technical inverse head and shoulders because this shoulder is not as, it's like, dude, if you have 3 points down below and you're starting to come back up to a range, resistance, and you're seeing volume pick up, that's probably a good indicator. It doesn't even matter. This thing's ready to fly. So me personally, I'm a little bit more loose and lenient on that, and I focus more on my gut. Which, by the way, it's like there's pros and cons to that for beginners, right? But over time, as you develop more experience, many of you in your own businesses or in your own relationships, your gut kind of leads you to better decisions over time, right? Because you've done it enough. I would say the same thing when it comes to looking at charts. So not only do we have from a weekly perspective a range resistance here at 109, we have this descending, flag or this bull flag. We get a breakout right here. I'm willing to bet if you look at volume, it starts to pick up into the breakout. Do you see the little pickup right here into a new local high? Okay. Above range resistance, breakout, volume picks up heavily. Then we actually start to see something interesting. The moment the price breaks into new highs of 120, what are we seeing? A crazy amount of sell volume. Do you see this? Once and twice here. Now, that is not an indication that this trend is ready to end, okay, by any means. You don't know. But what it is an indication of is, there's something interesting going on. And let's go ahead and actually zoom in on that. So yes, we had a follow through and a break for new highs above 109 for another like $10,000 move, which by the way didn't have to be the top. Okay, it just so happened to be that enough major institutions looked at that price and said, we want to start selling, or we're in profit enough, or 120 is kind of based on our analysis where we'd like to sell. I don't know all the reasons. Again, you don't need to know all the reasons, but we do need to look at these charts and start to use the data that we're getting to make, more sound decisions. Okay. But this volume is pretty telling. Something's going on and it's big. Okay. Do you see the difference? Look at this. These big, growth in volume for sure to new highs. Great. But then immediately right after we hit that 123, the next candle, let's look at that candle on a daily time frame now. And then when you look at the weekly, you really get a better picture, right? Virtually no buying to the upside. Okay. All the way up here, nothing. Do you see the wick? No wick whatsoever. The moment we sold off from 123 and closed right at 119, the next day, okay, think about this for a second. No buying above that range at all. If anything, all we saw was straight selling down to 115, and then some dip buyers bought it back up right to 118. Okay, maybe, and the reality is you have a big old gap right here where the price hung out for a range. And so it's very possible that this is what, some people call a fair value gap, that this will be closed at some point in time. I don't focus on that as much. Sometimes it occurs. Other times you'll see markets like in the stock market, things will gap up and that gap doesn't get closed for years. So just because there's a gap in total, in volume, or this huge green candle, it doesn't mean it always has to be closed. So again, I don't always think about that. I just focus on what the price is telling me. It's kind of like a pulse. Like, if you're a doctor long enough, you've heard enough healthy heartbeats and pulses. Okay. It's so much so that one might be pretty close to on, but something just is off. It beats a little bit different. Okay. And this is stuff you can only develop, I kid you not, by looking at prices and charts enough. And more specifically, maybe even the tendencies of specific cryptos. So if you want to get good at swing trading or investing, like day trading type stuff, then yes, trading that crypto enough, watching it enough, you will start to understand the pulse of that specific crypto and market. Okay. Now that said, you'll see that we have no, but these, by the way, the fundamentals still apply across the board. It's just then you start to understand that one better. So that said, you can see that we had a lot of selling to the downside. And what's more telling is the volume. The volume is massive on that guy. Does that mean that this thing is over? Honestly, probably not. I would have expected the volume to continue growing to the upside. Okay. Because at the top, nobody actually knows. Okay. Not even the guys selling. They don't know if that's the top. They probably had a game plan to sell at 150 as well. So they're going to start taking profit at 120 and they could have sold at 150 and then we're going to sell our final bid at 175 if we reach that point and get an average throughout. But when you get enough participants or the largest participants selling all right here, okay, it'll not only show up in the volume, but then it's like it actually creates a resistance that not even they themselves knew because they don't know all of the other mass participants in the nation, in the world, at an institutional level that have buy orders set to go all the way up to 150. You don't know. So it so happened that this acted as a pretty strong resistance after the selling. Then we saw it occur yet again here. Notice the weakness. Notice virtually no buying now. Okay, the strongest wicks we got were a few days later, all the way up to 120, immediately sold back off. Virtually no buying at 120 yet again. And then finally, look at no buying above this range here. So I hope you're enjoying this call and learning so far. And if you want to take your crypto investing and trading to the next level, then you want to check out our accelerator program through that very first link in the description below, accelerator.altcoinpro.com, where we help you implement the SGS blueprint to put your stable coins and crypto to work in any market environment, where we target between 200 to 20% APR with the focus on safety. It's obvious you're not always going to get 200% APR because that's not feasible or sustainable over a long period of time, but more often than not, these yields last between a week to a month, and most people do not take advantage of those yields, which would only require between 15 to 30 minutes of your time a few times weekly if you truly wanted to manage it. And when you do the math at the total amount of time you would spend managing your portfolio using our SGS blueprint over the course of a year, it would be anywhere between 8 to 16 hours of your time per year. So go ahead and check out that link down in the description below. Be sure to watch this video, and once you do, apply. And by the way, if you do not see any open slots, we have been pretty booked out recently, especially as the market's starting to turn over. And because this program is quite intensive in terms of time with our team, you may not see a slot available. So just wait 24 to 48 hours before checking back in again, and sometimes one opens up. So go check out accelerator.altcoinpro.com and let's get back into the video. So by this point in time, after your second major sell volume day, time to look at it, a little bit differently. That's it. Like this right here is not really great to see. We're still holding a support. Okay, do you guys see it? But then you start to get another new lower high, right? And then wicks that are lower than the prior closes of these bodies, or this body in specific, okay? And then a breakdown right here. This one right here. And notice how we're not really expanding on volume. Okay, let's look at the volume a little bit more. Huge volume for profit taking or getting out of the market. Players literally just dumping their bags there. Not major volume here. A little pickup right here. Okay, let's mark that. And where did that pickup occur? On the actual day that we had finally closed below our range support, right? Not a single time over those weeks. I don't know how many weeks, but look, did we close below 117 to 116? So this candle right here spooked the market, which caused a dump. But you'll notice that the size and magnitude of these bodies or the volume bars are smaller than the ones over here, which means there wasn't as many buyers picking up the bag here. Instead, they were skittish and they maybe stood away, and there wasn't really any fighting for that range, which caused the dump. Okay, or better yet, it's a chicken and the egg type thing. Like, which came first? Who knows? I personally, I don't care. It's just the volume is far weaker here, relatively speaking, to the volume over here. Okay, which tells me a story. That's it. Now, you'll notice something also interesting, okay? Then we had a bit of what I like to call it a banker's play, That's what I call it. But this is a technical bull trap, okay? People get to be bullish right above our prior all-time high here and immediately buy this top, okay? Because we're breaking out for the first time. And then instead of taking or better yet, letting their stop loss get hit or getting out when there's no confirmation of a move or a support right here at 120, they sit in it and by here they're trapped. That's why we call this a bull trap. They were bulls and they got trapped in their position. Now they're in a loss, they're underwater, they're just not willing to admit it. Or they don't have rules around risk management. Okay. But right here, again, you'll notice volume is picking up and the volume even picked up on that sell day. The moment I see anything like this, by the way, from here on out in crypto, especially, and it might be different for certain markets. Crypto's pretty easy in this respect to see those bull traps. They happen pretty often. And many would argue it's just because there's on average less sophisticated investors than the general stock market. Who knows? I mean, I know a lot of dumb people in all markets, so I don't know. But that said, at 120, you'll see we saw a major resistance, immediate breakdown for a new range low. Okay. Rally to the upside, volume's not really strong. It's not major. It's kind of just, picking up slightly and immediately sell right back below on our very first breakout. I'm immediately out there. On that breakout candle, by the way, if you want, what's nice, and let's remove this real quick and keep it very simple. Okay. Right there. On that breakout candle, if I'm buying that, which by the way, there's nothing wrong with buying that. Okay. Because it's possible we get support here, we keep rallying. Right. It's possible that we rally for another 2, 3 days hard and then start to break back down. Who knows? Right. It's possible we never retouch that range again. So because these are all possibilities, it's okay to buy that candle. What I don't like, or what I would, where I would have been stopped out, okay, in this situation is right below this high, or excuse me, right below this low, right? You buy this breakout candle and you have to do the math on that. What's your position size? But let's say you bought this candle right here on the close, okay? This is only 3.7% down. If you really want to be, very, risk adverse, 4% down. If it hit 4% down below your breakout day, okay, guess what? You're out. 4% on a how big of a position? 10, 15, 20% of your portfolio is really not much. So it's okay to be wrong there. And this candle would have essentially told you, hey, this thing's done for a while. You know where I would have re-entered if we came back above the range and put in a new what? Higher low. But instead, what did we get? Immediate sell right back down to 112, and we put in a new low. This is where you begin to start to see, oh, this thing is kind of over. It's at least for a while, right? It doesn't mean it has to be. It just means for a while, personally, I'm going to sit on my hands and wait for a new trend, a directional change in the trend. Okay. And what's interesting is you kind of got it, but here's where things start to get interesting. And this is where, by this point in time, I was really getting skittish, right? When you start to see, and I've talked about this in the past, this broadening top pattern, or something I like to call a megaphone pattern, that type of vol is not healthy to be in. I usually actually just stay away from those markets completely. They're very dangerous. You'll get, in and out of moves too quickly. They're essentially there to grab liquidity from retail investors closer to highs where, these institutional players will be majorly in profit. And again, it's no one institution. It's a conglomerate of all people and players. But when I see these types of things, I tend to stay out. Where I really skittish is when I continue to see the major sell volumes on those days. And October 10th was a big one. Then you continue to see growth and expansion of that volume to new lows. Guys, like, it's over. I'm pretty sure I started really talking about it in October. I was like, this thing it's getting really close to over. I think the bull market's getting close to done. And then, you start to see something like this where you see that 50 week SMA that's consistently been trending, to the upside, rolls over and is now making a new downtrend. Okay. And the price is below that. What you could call a support, I don't really care to, but this is very bearish. So now we're currently sitting at 64. And if we look at the monthly, you'll see that we now have officially, put in a new local low. We do have a decent amount of support here. Okay, so if I'm just looking at this whole range here, if I look even at the VRVP, which is a visible range volume profile, you'll see that we actually have quite a bit of like support right here, but no, and again, this is based on actual volume or shares traded, which is why you always see it so much bigger down below, because it's a lot cheaper to buy, 1,000 shares of Bitcoin at 18K than it is to buy 1,000 shares of Bitcoin at 67K. So that's why sometimes this is kind of annoying. I wish it was based on the dollar, but it's based on volume, or total shares. But that said, when you really focus on here, let me just try to make sure that we don't see that and we just see these. You'll see that we actually do have a decent amount of support and a cliff between 68 down to 56. We also see that essentially this means that these are points of major interest for Bitcoin investors. Okay. Not only did we see resistance here in 2021, we saw a lot of support here in 2024. So now that we're back in the range, and now that this is what, 1, 2, 3, 4, 5 straight months down, we're getting to a point now where the market might actually see a little bit of relief, at least for a month. Now, when you look at the weekly perspective, I rarely use RSI, guys. I really don't often. But this is essentially, I think, let's look at this right here. I don't know how low this was, but I like to click on it. And I really like to zoom in there and just put a line there on the past time we were actually in this range at the low. I even put a line there, okay? Just to see when that occurred and to see what happened after the fact. And let's remove the VRVP. And you can see that we were deeply oversold by here, okay, in June of 2022. However, although the market had finally stopped kind of, having those nasty deep sell-offs, which caused that final sell-off from 21 down to like 15K. And you'll notice that we still had some time left before the market finally bottomed and started turning over, which means this is where you actually start to get that divergence, okay, over a longer time frame. And those are actually pretty high probability trades. It's just it requires patience. But we're looking at another 133 days from the actual low on the RSI where you start to get a divergence on the weekly. Okay, so let me mark the point on where we actually bottomed, right around here, right? And you'll notice the price is actually down on that. And this is something that Nick talks about and teaches, right? We see this divergence on the RSI where we got a lower low on the price from this point to this point over 133 days. Okay, but look at the RSI, right? We had a higher low on the RSI, which is your divergence, right? I like to say convergence because the lines would converge at a point. Again, it's not that important. All that matters is that you see it. Okay, so from these 2 points right here, you can see that the line is trending up. So then I'd be far more confident to start taking trades, especially now. Here's what I actually do like seeing. Okay, so it was November. Awesome. Thanks for looking that up. That said, I love that now I've lived through these events. I can remember, and like I think that's when that happens. When you live through the events on the chart, it's kind of weird to think about. It's time passes, anyways, right? In November, you'll notice that there was a major capitulation event. Now, what I love about seeing volume bars like this into all-time lows is that this usually marks the end of an era, if you will, or very close to it. Okay. So when we look at it, okay, RSI right here hit its all-time low. We actually put in a new low, which is why I don't believe we're at our all-time low just yet. We could get a month, maybe two of, a retrace to the upside, before breaking down further. And then I would be more, I kind of want to see something like this where volume gets to be very below average and boring. Price action starts to tighten up in a range, something like this. One final capitulation event, volume picks up heavily near that bottom and then it dramatically declines again. Why? Because look at the bars. Guys, these are weeks where everyone's kind of given up. This right here is just total hopelessness. Do you see this? No one's interested. This is how you can pick bottoms. Now, what's more exciting is when you start to look at where this bar was at 20,000 down to 15,000, how far down, even to 20,000, were we off that all-time high? This is why I like actually seeing these types of volume bars near those lows, because whenever you're actually down 60+%, and then you see these bars, that's when it's like that's when things get exciting. That's when the real money's made. Okay. And you see, we actually see that throughout most markets. You'll see volume dry up. This is why volume's so important. Then you'll see it maybe pick up on a major capitulation day to a new low, but you'll notice that the size and magnitude of the candles become smaller and smaller and smaller into complete and sheer boredom, which is what occurred right here. Just everyone gave up. Everyone's already out and capitulated. Because the FTX event, I can assure you, if it occurred sometime in November to January of 2022, this chart would have been like boom, all the way down here in a few candles for that 68% loss because it was such a big event. But when you really think about the magnitude of that event, for it to only cause the price to dump another 5K, that's how you, it's a good indicator. Think about that for a second. That news, I'm not using the news like crypto's done and over. It's all a scam. No, that news is to me, when I look at the price, it becomes an indicator, right? That the like this was a major event, but the selling is slowly starting to like get smaller or weaker, if you will. Okay? That there's less people in the market that are able to sell the price down heavily, which means now what? When there are no more sellers, there's only buyers eventually. Now, it doesn't always have to happen. I want to be clear. Just because there are no more sellers does not mean there are buyers, which is why it's safer to stick with your bigger assets because the bigger assets already have a lot of mind share. They already have a lot of attention. There's already a lot of people in the past that have bought it or now are looking at it and saying, I would like to buy it. Okay. And now institutions too, especially if it has a spot ETF, there will always be some level of interest unless that ETF completely gets delisted. Okay. If it's not profitable, they will delist it. And that happens. So, just as a side note, there is no guarantee in the markets. But when we look at this, this is interesting to look at, right? Because now we have a picture and potentially what's occurring over here. Do you see this? Major sell volume. This doesn't mean that we're done just yet. We're getting close to a range where we have a decent amount of support. We could potentially go lower to like 54, right? Take out those lows and then come back to the upside. But it is nice to see that RSI is extremely close to that prior low, which means we could be weeks or a month or two, right? Where we retrace and you see RSI start to pick up and then put it in a little higher low over here while the price goes something like this and then dumps further to the downside. Which is why I've kind of been sitting on my hands now. I think a lot of this major vol is kind of done for the short term. And even then, right? We did get this breakdown just the other day, yesterday, on a little bit of volume that's picking up. But if the price of Bitcoin, on Solana it's already occurred. On Bitcoin we just broke down. You'll notice that we have a series of what? Lower highs and now a lower low. But if the price starts to break back above 66 and gets into the 67 range, me personally, I'm buying that long to the upside. Okay, and I'll watch it closely at 70 to like 71. I think just with the amount of months we've been selling off, and now that the selling is getting weaker, maybe if we had another breakdown that was deeper or stronger here to 56 to 58, I'd be more excited about a short now. But even on my short position on Solana, I exited, and I believe I'll look at the chart here. I'll tell you where. I took a little bit of a long. You'll notice that the difference here is, look, on a Bitcoin we broke further down, right? We're somewhere in this range right here. On a Solana, a lot of the sellers might be kind of out now. We broke down to 75 bucks and are supported right here. So this would be what I would consider what? A bear trap. Okay, do you see it? So, and what I love about a trade like this is I don't need volume on something like this. It's just a pretty straightforward, very, small trade that can make you a little bit of money. But you'll notice lots of support right in this range here. Break, took out those lows and immediately came to the upside in the exact opposite manner that we saw at a Bitcoin top. Okay. So this little bear trap, worst case scenario, you take a position here. I'm not saying you should. This is just what I did for a little move, maybe up to like 85 bucks. Who knows? I'll watch it closely once it starts to hit those ranges. Worst case scenario, my stop loss is here. I lose literally nothing at $75. Okay. But in when I see the lows taken out and then immediately it flips back over, sometimes the volume waits, or better yet, the bigger buyers will wait to see what occurs here for a little while and then step in and boom, 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 and then you get a move to the upside. Okay. And this really is the local bottom for the short term. With the market so deeply oversold, I think there's going to be some opportunities in that direction. That does not mean that we're done with a bear market. Okay. Again, I'm just thinking about a counter trend trade. I'm looking for opportunities. I'm just keeping myself sharp. Okay. You do that by working your muscles. You do that by placing a trade here and there, not worrying about a loss, right? Practice with good risk management, but don't worry about losing. Okay. Worry about being confident in the trade direction, right? But don't think about, well, if I'm going to lose, then I won't do it. No, no, like it's good to practice. So that said, gosh, I wish people wouldn't enter so late. I didn't realize. I hope they weren't waiting too long. Um, that said, I do like little plays like this. I'm not overly confident. It's the local bottom period. I'm trying to make some money here. I want to have fun with it. In terms of where we might go, I think it's possible we go lower. I'm not loving the price action here, but what I am okay with and what I'm seeing on Bitcoin is that notice that the selling is becoming weaker and weaker and weaker. We're still kind of somewhere right here, though, right at the 62K range, which is a major support, right? And not only is it a major support from a very short period of time, it's a major support going back months, okay, into 2024. So it's something to think about with, 5 months of straight sell pressure. Um, and I think again, if we see a retrace on Bitcoin, we're likely going to see that carry over into the rest of the market, where you might have an opportunity if you've been stuck in any of your positions to potentially look at de-risking and getting out, and living to fight another day or buying deeper dips. Does that? I'll put it this way though, right? If you didn't already start selling somewhere at the 100K range, down to 90K range, or anywhere higher, selling here now it's kind of like, you should actually already have a bit of cash and you should have started to buy or DCA over the long term, right? Because we're already down 50%. And so realistically, my buy zones would be somewhere at 58 down to like 65 and lower. Like actually like start to really DCA weekly, just buy, be consistent, take more of my paycheck, continue to accumulate. Here, I mean, although you're saving yourself, some, you've already kind of sat through a lot of that vol. So it really comes down to your game plan and your time horizon and your outlook. But maybe this cycle is a good learning lesson for those of you guys who've been stuck in a position, or haven't been earning on your crypto right through any of the yield farms and stuff. So, um, that said, I'm not as bearish right now as I have been. I did see a week or two ago we were watching this right here, this exact same pattern occur, where you'll notice, and what's interesting is, right, we spent a bit of time here, broke out for a little bull trap, and immediately broke back down. This was about a month's long period. From the low right there, right, we went and put in another 37% loss. But let's just do the math from that all-time high. And remember that because we didn't rally as hard this cycle, it's likely we're not going to dump as deep potentially, which means, you have to like take that into consideration. This would have been a 74% loss. And right at the range that we're kind of at, this was about a 60% loss, of 58%. Okay. So that's something that like, we're only about 8% difference here in terms of where we've been trading. Um, and I just think that's natural in a market that was smaller, was easier to pump, easier to dump. But with all of the institutional adoption, we have to remember this cycle was the very first cycle, January of 2024. We've had real spot ETFs. So we're talking actual institutional capital has the opportunity to invest. And now with the market structure bill and everything, it's a no-brainer. Most of them are already positioning beforehand. They know it's going to pass. They know they're not going to get in trouble with regulators. A lot of these pensions are likely going to start to buy, and when they do, it's going to show up in the price. But when? And the reality is if I'm them, I'm not doing it all right now. Hell no. If I'm a real professional and I'm looking at this chart, I'm wading through it and seeing when do we actually bottom. At what prices would I be happy? Me personally, if I'm managing a multi-billion dollar port, seeing this, I'm not buying at 64. I'm happy at 40 and under. Okay. Like that's where I'm happy. And that to me, and by the way, if they saw it change directionally, if it didn't hit 40, they'll still buy, but they'll be buying into a bullish trend, a new trend. So that's my thinking around it. I would assume that's how an actual professional operates that's managing billions of dollars. And so yeah, but I'm liking that I'm seeing this. And here's the reality, right? Off of those lows, what do we see? Another 37%. Let's see what would happen right there. So these are kind of our major low right here. Uh, yeah. Look at that. 41, 42K, which is actually a pretty strong resistance and a support. Do you guys see that? Resistance, kind of a support here. Resistance, resistance, support, right? And then we kind of play with the range a little. Resistance, breakdown. We played with the range quite a bit. So between the ranges of 44 down to like 39, 38, that seemed to be a pretty good range of resistance and support. If this played out exactly like it did back here, I'm not saying it will, but I would like to see us start to retrace within the next couple weeks. Well, we're already about 20 days in, which gives us, if this pattern is going to play out between 30 to 40 days, if we can't get back above 70K on Bitcoin, the likely outcome and scenario is we are going to go further down. Okay. Um, which is what I want to watch. So I am playing little bear traps right now to the upside. I will be watching Bitcoin closely up to that 70K level, or if we can't be supported at 62, I think we have enough support here realistically for us to hold the range for a little bit while longer. So if you're not confident in these small plays, maybe just sit on your hands and wait for a bigger opportunity. Because I don't think we have a big one on the horizon just yet, unless we get some sort of a black swan event. But even then, looking at the current news cycle and environment, I don't think the Iran stuff is big enough just yet. And I think that's the only thing that I can see being really big for the market, at least that is in sight, like that I even know about. So anything else is obviously an unknown, which is why it's so important to practice good risk management. So let's go ahead and answer a question or two. I hope you guys learned something new today.
The when the green candles spike up, I mean, I went through your whole TNA, but it's been a month or two.
Okay.
Uh, what is exactly does that mean? The top of the spikes. Is
I'm a
that
little
where
I'm a
they
little
stop
confused what you
stop
mean by
buying?
a spike. I don't ever use the word
Uh,
spike.
well, um, what's the word you use?
Like are you talking about a wick?
Wick. Yeah, my bad. And I'm sorry.
Okay.
It's been a long
No,
day.
no worries, brother. Let's see if I can find one with a long wick. It's pretty straightforward. So, like, look at relatively speaking here throughout all of this price action. Like, what really stands out to me, okay, in terms of a wick is this one right here. Do you see that?
Mm-hmm.
All it means is this. And this is just basic, you know, I would say basic price action technical analysis. This means that the price at one point in time, I'll mark it actually with a line and I'll show you. Okay. Let's go ahead and get that right there. Actually, let me remove that first and put these lines. Close enough. Try to get it like on there. Okay, and then I will go ahead and put it at the bottom of the other wick. So this is the range that week we traded at. Okay, so like I'll go now and zoom into, this is going to be kind of annoying to do, but we'll do 2 hours. I'll do a 2 hour time frame so we can zoom in closer. So each one of these candles is now going to represent what? 2 hours of time. Okay.
Okay.
So now we have a line there for the very first opening 2 hour period. Okay. I'm going to drag this to the next day. So Monday, July
And
14th.
the days are still a 24-hour clock, correct?
Yeah, everything is 24 hours, but I'm using UTC because that's universal time zone and crypto trades 24/7. What time zone are you talking about, right? Like, no
Right.
one cares about Pacific time, right?
So
No one even cares about
UTC, is that a
Eastern time.
blended time zone?
Yeah, universal time essentially. I don't like I'm
Okay.
pretty sure it's got military applications, it's got applications for like things that are timeless like but I'm not an expert on time zones. So, that's just the one that I know that I use and that I believe most people in crypto use to
Okay.
define when the daily close is, right?
Thank you. I
Because in
learned.
then Russia it's going to be different, but they still have we have some consistency. In Russia, it might be 8 a.m. and here it might be whatever. And it's like, but for both of us, that's when the close happened. Does that make
I like
sense?
it.
Um,
Yes.
so now notice this right here. I have two lines here. This was the low of it. In other words, we opened our very first 2 hours. We actually opened at the low. We
Okay.
immediately were bought up within 6 hours. So 2, 4, so 2, 4, 6, 8. By the eighth hour of that day, the price was bought up. And then into the 10th hour of the day, we sold off and continued selling off through the rest of the day to a low. Okay. And actually, we closed right here. So technically, this was our final deal because this is the new day. So
Okay.
right here is where we actually closed. We opened here, we closed here. This was a green bar. How do I know this? Because our close is higher than our open. What
Hmm.
created this long wick is the fact that buyers bought it all the way up and sellers, and the moment it hit 123, were overpowered buyers and immediately sold it back down,
Mm.
which is what creates that long wick. And I did it on a 2 hour because, I just didn't want to zoom that far back.
Yeah.
But if I go there again, that's actually what occurred on this day. Buyers bought it all the way up, and then within some period of that day, they sold it right back off to this range here.
So the timeline between the buy and the sell could be hours or it could be a half a day
It
or a
could
whole day.
be it could be anything. It could be 5 minutes. It could be one big
Right.
buyer, one big seller. I'm
Yeah.
less so worried about the win, and I'm more so focused on just what occurred.
Right.
Okay.
Right.
Because when is impossible to know. So for me, it's like you get this question from amateurs 24/7. When do you think that's going to happen? Like when do you think it's going to hit a new all-time high? And
Yeah.
it's like, I don't know, when will the sun stop coming up? I really don't know. I'm not a fortune teller here.
Yeah.
Instead, I focus on price targets. What I say is the what. It's like, well, here's what I've seen occur. Okay.
Mhm.
I've noticed that the sun always kind of comes up every day. So for me, I would assume it's going to happen eventually again. So I'm more so focused on price targets and less so focused on when.
Right.
Um, and even then with the sun, it's probably a bad example because we all know it's probably going to come up tomorrow. But I'm the what. For me, it's like the what. In this case, like, do you know it's going to break down on this day? No. I'm focused on when it comes back into the range here, what's more likely and potential and possible based on the price action. I saw a
Mhm.
lot of profit taking up here. I saw no buying above here. I saw no wicks that are strong to the upside again. All I'm seeing is weakness, weakness, selling, selling, breakdown. So
Mhm.
when should I sell here? Why? Because the price is telling me that. If I saw a huge wick like this on the downside, it means maybe it's not ready yet. Buyers and dip buyers, the price broke down to here. Think about that for a second. On a day, at one point in time, it could have happened in an early day, late in the day. I'd have to zoom in to find out. I don't really care. Although, it helps if you really want to know. Um,
And it broke down to there because that's where the selling point in that particular time
I,
frame. That's the bottom.
I think it broke down to there because enough people sold, and then
Right.
there's so many order books and there's so many different players you don't know. But
Okay.
I'll put it this way, for whatever reason, when it did sell down to 114, enough people dip bought or bought it at 114, and all in that buying pushed the price back up to 117 to close. It's
That's
still
yeah.
closed lower than it opened, which is why it's red.
I see.
So this is just a bunch of dip buying, and it's not like that's just what occurred. And then we hung out above the range for a little while longer until we broke down. So a wick, all it means is this: the price at some point in time during that period, right, if from a 4 hour, 12 hour, daily, weekly, monthly, was sold or bought all the way into those ranges and
Hmm.
then pushed back in the other direction, which causes the wick because it didn't close there. Price traded there, but it didn't close there. So,
I get it.
okay. How do you
Thank
see
you.
the
Thank
T?
you.
Yeah, no problem. How did you see the TRX chart? I don't know. Is that just a ticker? Are you talking about Tron? Is that Tron? No. What is Tron again? It is Tron. You literally type in TRX USD and then just click through them and see which chart looks best. I would assume probably your USDT pairs do for Tron, and I'd will be willing to bet it's like an OKX that has the majority of volume. If not, it's going to be Binance. So, and that's how you look at it. And you can see that this thing has done pretty dang well. I think it's in the Asias. I don't play with it much, mostly because I just didn't like Justin Sun and I thought he was a scammer. But, at the end of the day, my opinion doesn't matter. The market, those people in that market have made money. So yeah. That said, I'd practice a little bit of caution in the current market environment unless you can get back above the 32-cent range. I do like seeing a support at 27, maybe playing that range, but if we see a bit of a retrace, I'd like to see this price get above 32 cents before I start to play with it, considering that is a range resistance. You have a bull trap here. And if there are no new buyers in the market in a very volatile or scary market environment, the thing could dump lower. This has been a very strong trade going back to essentially the lows in 2022. Pretty consistent. And this is why mostly I avoided it. Whenever I see price action that looks like this, you know that it's botted. You know that it's some major market makers, in this case, a very major market maker, wants to see the price go up and wants more new buyers and retailers to buy it. It's rare to see a chart that looks like this without it being very sketchy. On meme coins, you see this often, and then usually see it go boom, break really hard down. We also saw a really big market maker do that on MNT, which is why you need to have really good stops. You'll see that this chart, and obviously we're on a weekly, but if you look at the daily, right? It's like textbook, like up, down slightly, really high up, down slightly, just a beautiful little trend line, too easy to trade, pumps and rallies, and then immediately this is market maker taking all of their profit while everyone was buying their bags along the way. They basically were in all the way down here, and their average out is somewhere along this entire trend, so probably around 130. But do the math on that. When you're doing millions and millions of dollars, it really adds up. So they make a lot of money sucking people into easy plays like this. And this right here is truly institutional level selling. So you just have to be careful when you see charts like that. Tron, I wouldn't have expected to rally as hard, but I think Justin Sun is really serious about his business. And for that reason, it's been safer than most. Me personally, I haven't played with it or touched it. So I'm not saying you can't. I'm saying always practice good risk management, especially when you see a chart that looks perfect like that. Too many people get suckered and then eventually something breaks down hard and then you're cooked. You lose a ton of money because everything just keeps going too well. You keep tossing more money at it. You don't have any protections in place. Everyone's done that probably a few times or once, and it's not worth it. So, it doesn't mean it can't go higher. It really doesn't. I just told you how I would play it. Let's go ahead and answer in one more question and we'll hop off.
Hey Paul, I got a question for you.
Okay, what's up, Phil?
So, I've been looking at like history charts when back in like 2017, how we have the dip to 2019, and then how in like 2020 we have the dip, and then into 2021 we have that uptick again. And I've just been kind of like comparing and seeing like looking at where we're at currently in the market. And I mean, my current own thesis is like around like Bitcoin can drop again. With like, for example, the State of the Union that happens tonight and a lot of fundamental analysis, how much does that play into technical analysis versus like the past history it have and then current events in the future?
It's really hard to say. Again, chicken and the egg type of thing. My personal experience or the way that I view it, is the markets are forward looking. So like I think most of the price action that occurs in markets, better yet, if you see really overall arching poor fundamentals, like the fundamentals don't look great. And right now we're starting to see a lot of AI, stocks or companies, I should say, get crushed because of Anthropic and like all of the new technology they're releasing. I think the AI trades mostly already occurred. Very few companies are going to do really well now. I don't know. Here's my point. I actually think that shows up in the prices first. So it's actually priced into the charts first. When you see the price action, it's actually telling you what's really like what the majority of investors are preparing for. because that's why they're trying to get into or out of the trade before everything occurs, right? So, for example, this right here tells me that it's likely at some point, because this hasn't really been that long of a time, like 140 days in the grand scheme of markets is not that long, you know? And so my personal opinion is that the crypto market's forward looking probably by half a year now, which means this is experiencing the majority of the downward price action. And I think it's going to carry over into the stock market, which is more resilient. I think more people obviously have faith in the stock market than they do in crypto. And that's proven by the amount of money in it, one, the amount of history it has, two, and actual profitable companies. See what I'm saying? Like you're actually buying a revenue producing product. Virtually no cryptos do that, except for a few, and our team covers them, right? Like Hype actually producing revenues. But is it worth what it's worth at the price it's selling? And is that value tethered to the actual token, right? So like these are big. It's a hard conversation to have because I don't know exactly how to answer it, but I will say that this is my theory that what you're seeing on the chart is actually forward looking. Then, if you're already seeing a bunch of weakness on the chart and then some major event that shocks the world occurs, that it'll actually further drive the price in the direction it's already going, both positive and negative, right? In other words, the trend really is your friend, right? And so, if the trend is down and we see a very nasty black swan event occur in the next couple months, or some, war broke out, terrorist attack, you name it, right? Usually the big ones, yes, it's likely going to send the product flying further down. Now, here's where things get really interesting. In my opinion, when you see a nasty event that would have done something like we did on October 10th or this week on February 2nd through February 8th, right, occur, and the price action doesn't, send the price flying down as far as it did for 20, 30, 40%, but instead we dump 10% on a big event, that's your indicator. And this is how I use news. That's your indicator. There's not as much weakness now. There's not as much sellers anymore. Most of the sellers have already gotten out. Most people have already capitulated. There's literally not enough selling to dump the price another 30% because you can always go down another 30%. At $10, Bitcoin could dump another 30%.
Do you mean that there's less sellers over a longer period of dips, I guess?
Oh, over a longer period.
Oh,
Like for example, how we started at like 126 was our high this past year, and now we're at 64 roughly. So like as we continue to downtrend, there's less and less bulls as we go towards the downtrend.
I would
Or
say
or less and
there's
less
less and
bears, my
less
bad.
bears. Yes, obviously,
Yes.
right? Because like what caused the selling? It's simple. People exiting. People
Okay.
selling their product or shorting it. But either way, people eventually leave. When someone entered at an average price of 110 and they literally can't handle it anymore at 70, what do? They
They
sell.
buy or
Well, no, they
sell, yeah.
sell. They sell. Eventually they get out. What causes all of that pressure is people selling, is essentially what it is. It really is as simple as supply and demand. It's just sometimes markets can be more dynamic and we get confused in all of the weeds. What I'm simply saying is that's what actually causes the price to go down. Eventually, you'll see that a major event will cause a smaller percentage dump. And then you'll see some little capitulation deal like we saw back here on the volume, right here. But it's way weaker relative to look at the size and magnitude of that guy versus all the stuff when we were really trending strong to the upside over here in 2020.
yep.
Do you see the volume and the magnitude versus ready? This guy is abnormally large for its range, massive event. And this is how I use news. I don't use the news. I don't actually look at the facts of the news. I focus on how the price action and the market responds to the news, which actually tells me more. That's the real indicator. And this is stuff that like I don't know, you obviously learn over time, but this is stuff that you don't even just learn by taking some price action course, right? Like this is what I found real pros do. And I've learned a lot of that through many books, but I would say a really good book for most of you guys to start on is Market Wizards, the original 1987 Market Wizards. Probably one of the best books I've ever read. That will teach you how to think like many of these like professional investors and traders. So right here at 20K, you'll notice that the price really didn't dump that hard relative, okay, like a 22% dump versus all of these moves, and this was far bigger news than any news that occurred over here. So that when I start to see that and I start to see very small weak volume and final capitulation type volume days into new lows, 70% down, 65% down, like I'm getting far more greedy now. And that was a fundamental event. Most people were selling and officially getting out here, but this is where you really should have started investing. Now, if you really want confirmation, just start investing when you get a new, trend back up to 21 for a new high. But me personally, like I get a little bit more greedy now here because I don't think Bitcoin's going to zero. So, but that's now a personal thesis. It's a personal philosophy, right? Which you have to have your own. So that said, that's how it's again, not the best answer. It's really difficult to answer that question, but chicken and the egg. I personally look at the price action first. Then I watch the news. The news, some major event occurs. How does it affect the price? It didn't affect the price. It's because it's not important. That's why. But we'll get back to you guys this upcoming week. Hope you trade it well. Practice good risk management. Appreciate your time. And look forward to seeing you guys on the next week's call. So one of the best ways to take advantage of the current market environment is to put your crypto to work for you and earn rent on it, whether the market goes up or down or trades sideways for a longer period of time. And here's exactly how you do that.
If you have over $50,000 in crypto and you're waiting for the price to go up, you're already behind. Smart investors, they don't wait. They make their crypto pay rent. And while most people let their portfolio sit idle, certain DeFi protocols are paying 20% to 200% annually without trading, leverage, or the stress that's involved with holding through massive market volatility. And this is how serious money compounds in crypto. I explain the entire system in my short video, how it works, who it's for, and why almost nobody in retail ever learns this. So if you have $50K or more in crypto, watch it now by clicking the link below.